The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. What a propitious moment to be on live right here after the long weekend. Hope everyone had a good weekend. Dow's down 184 at 21,802. The S&P is down 17 at 2458. Comp index is down 57 at 6377. The VIX is up 2.78 at 1289. Is that an 8? Oh, yeah, 1289. This is going to be a very interesting moment because what I said to subscribers when I sent out those, 15, 16, I don't know how many charts I sent out over the weekend. And I said that there were a number of things going on here and that it's going to be very important. If the Dow was down 60 or 80 points at any point in the next 2 days, it meant one thing, very negative. If it was up 60 to 80 points, it would be at least a short-term positive to say there's follow through to the upside. And here we are, Dow down 200 points. Very, very interesting. Let's go through the numbers and then we can go through the details. SPX.X right here is trading. This is the weekly chart. You can see that 2451 is the 9-period exponential moving average that must hold, and it's at 2457 right now. We're doing the cash, so let me go to the futures. The futures had a perfect peak D in the 120-minute chart, that peak F at 2479.25 back on the second and third, that top that occurred right at the close on the first on Friday. You got gap down, you tried to fill the gap, couldn't quite fill the gap, and now you're plunging towards a 200-period exponential moving average of 2454. I was asked a question, so let me just get to that question right here. You see that I've got a 4? That 4 is in the Chapman wave methodology. You'll never be able to get it in Elliott wave because my rules I developed over the last couple of years are really, they differ considerably. Just the concept of 5 is really what I've got. And let me show you in the Dow why this is a particularly important moment, because you went to a leg 4 on Friday in gray leg B. Underneath the 22,175 Chapman wave 5 completion and a peak D on the 8th of August. Pull back very sharply to 21,600. 21,600 is really important to hold over the next couple of days. And what's really important is that we went Chapman wave 1, 2, 3 at 21,600, 4 at the 22,038 high of Friday. And now, if correct, and this is only if correct, remember, you do the best you can, we will see a slide under 21,600, and that should take you to Chapman wave 5, and then we might see a very strong balance. What's really important here is what I show my subscribers to my opening call every single day, and even over the weekend, starting Saturday morning, is I was showing that, let me move this away, that in the Dow chart, it was above the 9, very sharply above the 9-period moving average, the daily, and the 20-period exponential moving average, the red line right there, pinky red. What was really important is what I noted is that, I wonder if I've got it right here. Let me just see if I can find it, because it'll be nice to do the apples to apples comparison. So we're looking at right over there. Did I get rid of it? No, there it is. Okay. So this is what, every day I show these charts and I give an explanation of it. So this is the Dow chart, and what I was explaining is that we've got two diverging patterns, the cup formation in the daily and the arch. In the same chart, but this time with the MACD and the stochastic on the unbalanced volume showing, I said that the MACD fast-moving average is near a crossover, and what I discussed is that any pullback of about 60 to 80 points will deflect lower the MACD, the fast-moving average, the green line, 9-period differential of the MACD, and that would be a negative. The stochastic was very strong, and the on-balance volume was very strong. So it'll be price movement. It'll be the opening salvo, the opening bell, the start of the season. And that started today. Everyone's back from vacation. Not everyone, the majority of people are back, and now you're in play. And what I had said was that we're looking at a couple of things going on. And that's why I discussed it in terms of just a 60-point move would make that difference. In the chart that I call the overview and market today, I showed that the 120-minute chart was topping out, that the VIX was really close to some area of a bounce, and that you can see right here, this is just the bar chart of the Dow and the S&P in my 5 quadrants, and that was right at a point where it was make or break. Up 60 or down 16, you got something very different. So let's get out of this, and I'm going to go on with the, here we go. So what we're looking at here is within the context of the markets, the Dow, down 204 points right now, is having the kind of characteristic that says, hey, we normally would see a sharp pullback from an overseas triggered event. Oops, I shouldn't use the word triggered. Impacted event, and yet the market is, and then there's the buyers come in and say, hey, it's got to be local. We don't care about that. And then all of a sudden, what have you got? You've got the market saying, we are done right now. We're getting out of Dodge City, or whatever it is. And that's what they're doing. And we're going to have to respect that. And what's fascinating to me is that within the portfolio that I spent a lot of time trying to focus on our portfolio, and we've got one particular stock that is just down a hair, and you would think this one would be down sharply, but it's not. We've got one stock that we bought because it's a commodity-related stock, and it's doing really well. And we've got another stock that we've had since August the 3rd as a demonstration of my Chapman wave methodology, which has kind of run its course, and it's about to, we aren't close to being stopped out. It's a nice game so far, but I'm probably going to get out of this because I think it's going to be pulling back. So this is very interesting. And now let's look at this in terms of the QQQ. QQQ series made an all-time high to peak D/B, and I made an emphasis when I sent out my chart analysis on the QQQ NDX 100 that there was a peak F potential in the 120 minutes, so we've got to be somewhat careful there. So you've got D potential in the daily, D in the weekly, F in the Chapman wave methodology in the 120-minute chart. But, and this is what's absolutely so fascinating about this market, I still can only call this a leg C in the monthly chart, and it made a new C on Friday. If it didn't, I'd say, this is it. But that was very interesting. So let's just quickly jump to gold as we're about to go to a break. Gold, wherever it disappeared to gold, GC is at this particular point up 11. Still making a leg D. Did it make a new high today? Let me just double check. Gold made a high on Friday of 30.45.50. Today's 30.45.50. I think we're real close to gold having a bit of a pullback in the dollar bouncing. I'll talk about it when we get back.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So a couple of questions I was asked about rig. Let's go to the oil. We'll go to oil. Rig is an oil refiner. Crude oil right now is up $1.58. It's at 48.88. Now, one of the reasons why at first I was a little nervous about buying a commodity index that had a greater weighting in the oil sector and heating oil. But then I thought, you know what? I think crude oil is starting to try to form a base. I like this. I like the fact that gold might be consolidating very soon, but it's held very well. So it could be just a slow kind of relief pullback, regenerating of energy, because I think the dollar eventually goes lower. So let's just look at this. So crude oil is up sharply. It's taken out. It hasn't closed above, but it's taken out all the left side highs going back to the high of the 14th, which is at 49.31. So that's the level it has to, but it's taken out the high of the 21st of August at 48.91. Now, what's really important about all this is that we're looking at the H pattern in the monthly chart, and I just have to say, give it time. It's the weekly that's really important. The weekly technicals have really been improving. Most importantly, what we're looking at is the trend line right here, resistance in the falling X formation of crude oil. I have to always change this because it's a continuous contract, gets smoothed out, so I've got to get this accurate. I'm always a little conservative. So first conservative, and that'll says it takes out 49.55. That'll be very important. But mostly I want to see a trade in the 50s. Once oil starts trading in the 50s, I think you've got new buyers coming in. Support is at 47.20 to 47. So let's go there. And now we're going to go TLT. TLT is, in fact, bonds are up $1.66. I believe this is going to be a recycle. The moment it goes above the TLT at 128.40, the moment it goes above 128.52, goes to 128.53, it starts a new leg, A, B, C, call that a D, leg D. And then the 128.58 starts leg C in the weekly chart and leg C in the monthly chart. Very interesting. Wow, good. And that's what I was showing in the my weekly look at the triple yields. So let's do this right now. I just want to go back to gold. I want to show something very interesting. Gold right now, up 11, almost 12, hasn't extended leg D, but it is still a leg D. It has to be a lower peak to make a peak D. This is a leg D in the weekly chart, only a leg C, but the monthly chart really is a building base for much higher prices later on. And that's the way I'm looking at it. So my suspicion is gold is going to have a retracement at sometime very soon. It won't be. It doesn't have to be deep, but it could be time. And that allows the dollar. We'll see. It's struggling, but the dollar has a chance then to rally a little bit and to go into the 90. It's at 92.34. I think the dollar has a chance to go into the 94.75, 95.30 area, and then we'll have to see if it can hold. But that's the way I'm looking at it. We're getting close to that kind of rotation. Now, I'm going to do a couple of things here. I just want so we did TLT, Oh, we're going to look at the VIX index, and we're going to go straight to Mike in Ormond Beach. Mike, how are you?
I'm doing great, Basil. The other day I got into the TVIX around 1587 or something like that. Now I'm wondering your opinion of this down move we're having now. Where do you think I should get out on this? I've been in and out of it a few times, and I took my little bit of profits. I mean, I got out early all the other times I traded it. But what do you think about this move in it? Where would you get out of the TVIX?
If ever there was an opportunity for the VIX index to actually continue to rally and to go into, this is the VIX I'm going to talk about just for the moment. VIX trading at 13. Remember, my rule of thumb is once it gets into the teens, you're looking at a market that should be weak. When it gets into the mid-teens and gets into the 15, 16 area, and holds, that's a different kettle of fish, because what we're looking at that particular point is that there should be sharp double-digit to triple-digit down moves in the Dow, strong double-digit in the S&P, and it should close at the lows. That's really important. Now, it's really a factor that I didn't do the VIX this weekend. I thought, you know what, let's not do the VIX for my subscribers for once. And let's see what happens on Tuesday. Well, now we know what happened on Tuesday. But what I had mentioned in my newsletter was that the VIX was at a level on Friday where I think you can start to expect a rally. But this is something different. This is the first time in a while that we've seen a bad news report that doesn't gap down, and almost might show 11 o'clock to 12 o'clock or 12 to 1 o'clock, the market is already on its way back to trying to get to new highs. This is, I think, a little different in the context, and I'll explain what I mean by the context. The speed with which you've got U-shaped patterns in the VIX index, even though it was going to lower lows and lower highs, that to me was impressive, and it said you've got fund managers now a lot more interested in buying the VIX, and when people talk about the death of the VIX, I say forget it. Human nature is human nature. We're always going to get nervous. You'll always have a VIX. Sometimes it's benign because the market is just so strong that you can't get any real rally of substance and duration. I think that this is the one, at least for a few days, is going to be important to monitor. So here we go. The TVIX, which you got, and congratulations, really nice entry because it's up 2 points. It's at 17.69. Up $1.76 on the day, but it gapped up. So this is what I'm going to say to you. If you have enough, maybe you don't, but if you have enough, I would put a stop on one part of my position, the 9-period moving average of 17.09. I would put it at 16.99. And that's just on one part of the position. The reason why I say one part of the position, because there's two ways that I want you to look at it. One is if the market really cannot rally at all by 3 o'clock, and by 3 o'clock we start to see minus 250 in the Dow, minus 260, that VIX is going to really be strong. I want you to hold it all the way into the close. Normally I would say, you know what, take something off at the close because, I mean, that's a huge one-day move to the upside. My thinking is if it closes really badly, we will gap down in the morning, and you'd like to be in that position. Then I would say to you, on a sharp gap down, just money management, take something off to reward yourself and keep the rest, and raise the stop in two places. Raise the stop on the one position to, say, 17, back to 1708, because that wasn't, I'm saying if it wasn't taken out today, instead the VIX closes in the 18s. Then I would raise the stop on one part, and I try to keep my call a little longer. It might mean that I'll have to talk about it during the day tomorrow, but the way I'm looking at this market, the speed, the way it didn't give many people a chance to even short because it looked like, oh, we got another one of those days where we gap down overnight and by midday we're starting to see a big rally. I'm just going to say to you, keep that in mind. That's what the market's done. But if you look at my Dow chart of the Chapman Wave 5s, this is a move that you would expect from a Chapman Wave full conclusion at 22,020. That was 38, I think it was. Let me just double check so I can give you the right number. So this is going to be, yes, 22,038. That was the Friday high. Gapping down like this really suggests that there's going to be a move, and we could get to 21,600 in this phase. So try to keep it as long as you can, but I would suggest take a little bit off if we gap down tomorrow morning, just for money management. But congratulations, that's a nice entry. Thank you for calling.
Thank you, Basil.
Thank you, Mike.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Dow's down 228 points. S&P's down 22. This is really a very quick slide, and it isn't just on the North Korea thing. I think that the internals were starting to weaken. I'll show you. I want to just show something. Over the weekend, I like to go back every once in a while, just take a couple of hours and say, you know what, go back to old techniques that you used to use, just tools, and just see what's going on, because the move last week looked to me like it was an aberration. That rally going with the Qs going to an all-time high, it just did not feel. And you can, I don't know how to quantify this. It just didn't feel right. So I'm going through my charts, and suddenly I said, you know what? on my talk on Wednesday night over at MIT at the Boston Investors Group and the Investors Business Daily anniversary meetup, it was mentioned that Chaikin, I just can't remember his first name right now, he's one of a technical analyst, and he's done some fantastic work in terms of getting particular formations and patterns, and he's got a thing called the Chaikin money flow, and he's going to be giving a talk sometime later this year. And I thought, Chaikin money, I didn't use it per se, but I just used it as a piece of information to see how it complemented whatever I was looking at. So I'm looking at this thing. Let me just make this a little smaller, because that's how I looked at it. So here I am. I find a blank chart, and I put in my Dow diamonds, because I thought diamonds has volume. The Dow is volume, but the diamonds are the real volume. That's what people buy and sell. And I'm looking at this, and I say, oh my goodness, look at this. Every one of those red, I made it small for now. I'm keeping it small just for the moment because I want to show you what I was looking at. There was nothing yet. It was just this chart right here with the big pink line right there. The blue line is the price of the diamonds. No, above the little dashed line is the price of the diamonds. And these are moving averages right here. So I'm looking at this, and I'm looking down, and I finally add, it took me a little while to figure out how to do it, and I finally add advanced decline line on this, advanced decline ratio on this chart. And I say, oh yeah, it's pulling back a little bit. Price is pulling back a little bit. And then I say, whoa, look at this. Oh my God, this is, the market's going to break to the upside. Look at all these red candles. Every time it's made a low, you've got to move to the upside, a sharp move. So I said, okay, let's track it. So I put the vertical lines, these gray vertical lines. Now I'm going to open it up a little bit more because that's what I had to do. And I put all the vertical lines in, coinciding, gray vertical dashed line, coinciding with the lows in this Chaikin money flow low, the red ones. I'm looking at this one, and that's the only one that didn't have a significant bounce. Even if it went down later, it had a significant nothing, a little bit of a bounce, and then it plunged. And that was the whole 2015 summer into fall decline. Well, I'm looking at this and I said, oh, thank goodness. That must mean that instead we're going to see more big red bars. And that was my analysis. I wasn't sure, and that's why I said 60 points up, 60 points down, because 60 points up would have meant, uh-oh. Well, what it's looking like is that correct. This is, in fact, a volume, a Chaikin money flow, volume low that could continue a little bit longer as the price moves down. So that was my big surprise. I thought, oh, no. Every time it's made a reversal here, you've got this massive move. Look, the red lines are the coincidences of the green Chaikin money flow tops. So I didn't even have time to check and remind myself how on earth he makes up the money flow. I just looked at it as another tool. But what it said was, you know what? If we go down early today, that's Tuesday, that could be the Chapman Wave 4 going to the Chapman Wave 5. Okay. I wanted to get that out the way and show you that sometimes you can just overthink these. But we had no choice but to overthink it. Why? Because that Friday rally took the Qs to a new all-time high. Look at that. QQQ down 2.22 right now. Matching, now the Dow's down minus 254. So what we're looking at here is the chance. It's still only a chance. Look, the weekly chart on the QQQ, the MACD and stochastic are still very poor, but the price is way above 142. Well, not way above. It's above 142.74. The 9-period exponential moving average. And the monthly chart is still a beautiful monthly chart. So this is going to be an important week in many ways. And what I had said, it wasn't every week's an important week. It was the levels that we were looking at. It was so tight. It was 70 points, 60, 70 points, up or down. So now, question I had about the XLF. XLF is, of course, the S&P Select Financial Spider. We are done. We had a small position long. I didn't like it. I said, I think we're going to get stopped out very soon. We're stopped out for a tiny little loss, but not a good pattern. So I was asked, it's down 51 cents at 24.26. It's that weekly chart that is hinting to me that it could be a peak E and not a C, and that the monthly chart is in a leg E. And this could turn into something a little stronger if the selling continues. KRE is the same thing. KRE is, in fact, the regional spider bank S&P ETF, down sharply, down 1.24, down 2.44%, and that is this is an E/B. Why did I do that? That should be an E/B in the monthly. E/B. Better chance that it's going to be an E, but we don't know yet. The next thing I had questions were on Goldman Sachs. Yeah, Goldman Sachs had a very nice move for 3 days last week, and given it almost all back, it's down 7.58 to 218, down 3.36. The stock I was going to add as a short today, fascinating. I want to have a look at it. I have no idea where it is. I just want you to see because it had all the signs of being weak. VMware, yep, down $1.43 at 106.05. Not that weak, but it was a peak E in the daily, potential peak E in the weekly, and only a leg C in the monthly, and kind of typifies what we are looking at here in monthly charts, that they are still in different sectors and different stocks, strong monthly charts unfolding. Now, I said I would, a question about would I go through my Dow Quartet. My Dow Quartet indexes, General Electric, had a fantastic session on Friday. They're going all the way into the 25s, having been in the 24.15 area just 4 days ago. Now it's down back at 24.68. So that was maybe an aberration. That's why I didn't want to do anything, but just to treat it as an observation, one of my technical tools. So GE is, we'll see. If it takes out 24 in the next week, that's going to be really bad action. GE IBM is the next one. Had a good couple of days, and now, not too bad, down $1 at 143.05. Maybe it's trying to find some kind of a base. Not too good. Triple M, which is one of the Dow stocks, very, very poor action. Made a peak F weekly way back. This was May, wasn't it? No, it was June, the week of the 23rd at 214.57. That was a peak C in the monthly chart, just pulling back, not giving us any good signs. And UTX, of course, is United Technologies, and they are down sharply, minus 5.5 at 112.25. What did I read? Was it UTX that was going to take over something? Let me have a look. So we'll go to the news right here. News. This is UTX. Click. And what do we get? We get, okay, headlines. Aerospace, United share. Yeah, hold buyback. I'll be back. Buying Rockwell.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So if I make Rockwell Collins, which is a defense stock, right here, Chapman Wave, Phantom Peak, red, we get a D in the monthly. We get a D in the, not SG, just D, a D in the weekly, and we get an F in the daily at 131.18 current. The high that was made 5-6 days ago was 135.31. And who's taking them over? United Technology. United Technology to acquire Rockwell Collins, just announced. So isn't that interesting? Rockwell Collins gets taken over at an all-time high. Let me squeeze this because this goes way back. It goes back to 2001. I remember when I think they were a spin-off, in fact. Rockwell Collins goes to an all-time high, and the United Technologies, UTX, at a double top, 124.45 back in February of 2015, and 124.79. I just marvel at how does this work? You go 2 years from 124 down to 83, and then you go within less than 50 cents from a double top all-time high. And at that point, you announce that you're about to take over a stock that's at an all-time high. Tut, that's not good for United Technology, at least for now, for the next few months. So not good. I mean, maybe in the end it's very good. I'm sure they did their due diligence and all that. But all I can say is, wow, bad timing. They should have just waited a few months, and they would have got Rockwell Collins about 30% lower maybe. But then UTX might have been 30% lower. Who knows? All right. So enough with that. Question about CVI. Now, I don't think I've ever done CVI. CVI is CVR Energy. A, B, pulls back today. You know, CVR Energy Inc. I don't know. Judy wants to know about this. When stocks have this kind of formation, I usually see jumps like this as starting positions, but not as a confirmation. I hate to say it, at 21.19, I really need to see 25.50, 4 points high, almost 20%. And then I'm going to say to you, wow, that looks good. At this point, you can get chopped to pieces. So it acted very well, but on a day that it should be rounding, it's down $1.49. I'm not sure what that's about. Let's go to the next one. CVX. Wait, CVX. Let's see what that's. Oh, look, that's nice. Okay, so now all of a sudden, you remember before I said I just wasn't sure about the multinational oils. If you're looking for dividends, and I was looking at Verizon and Telephone, I said maybe that's an area, even though there's a lot of competition, maybe it's a little bit better area. Now I'm going to say, I think for this particular period, because I'm starting to see some inflationary stuff going on. You've got gold moving up, but my commodity index is doing very nicely. I think this is something that has to be taken not lightly, and quite seriously, in fact. So I'm going to say that CVX and ExxonMobil, XOM is the symbol. No. Out of the two, this time I'm saying CVX actually has a better chart formation. It's looking better. If you are prepared to stop, even though it's a dividend stock and you really don't want to mess around, I would, at 109.07, I would use that dividend of 100 to take the 4 points dividend, $4 dividend, or whatever it is. I'm sure it's over 4%. To use the dividend, make a stop of 104.75. There are 104.75. Yeah, that's 5 points, just over 5 points. I would do that, and I'd say, you know what, if you want to treat it as a dividend stock, right here is possibly a place to think about. Don't get carried away. Just start a little position and give it 3 weeks to see, is this, because if it keeps moving up, you want to be adding. But if it stalls, you say, you know what, I got my stop in place. I'm not going to mess around. So no, the question was just what's the waveform? It's peak B in the weekly, and it needs to go above. This is as Chevron Mobile, 109.02, up to only 25 cents today. Needs to get above 111.44. So that's 2.5 points up, and then it breaks out, or 4 points down, and it kind of breaks down. Okay. Next question I had, Sarah. So I did that. ITA, did I finish doing ITA? ITA. Whoa, that's a sharp pullback. Down $1.80. BATS, iShares, I always forget what the heck this is. Oh, aerospace, right, this is the aerospace and defense. I always look at PPA. So I must write that down. ITA, write it down. ITA. So cool. Okay. I usually look at this PPA, and it went to a ABC. It's a G/C in the weekly, so it's not quite done yet. It doesn't look good. Now, I don't want to take time now, but some of you might remember that in my webinars of last year, and especially the very beginning of this year, I made a big deal. I spoke about turn of the century, the 20 years before, the 20 years after, how there's innovation in the 80s, 1880s, 1780s, 1980s, and that comes to fruition early in the next century. And then you go through the period, a cohesive period, where all that technology has to find a place, and then it gets whittled down to just a couple of things. Instead of having a myriad of technologies, you really get just a couple, a handful, and they go on to be the automobile, the whatever it is. So this is where we are. And then I also spoke about culturally at the turn of the century, where you get the breakdown of tradition and harmonies and things like that in the 80s, like 1880, 1980, 1780, just after Mozart, going into the Beethoven period. So, and then to go with it at the turn of the century, you start to get into the second decade, is where you start to think about wars and things like that. Remember, I did this whole thing giving some kind of a relationship. So I'm looking at this and I'm saying, how on earth are we going to go to new all-time highs when so many conflagrations are going on, so many mixed signals are there? I'm going to be talking about that a lot more over the coming weeks, because this is the period you want to be talking about it. This is the period that says, maybe we do go to new all-time highs. Maybe the millennials start to really come into the market. Maybe the folks, I always say my age, but maybe it's older than my age, get back into the market when they all got out. So many got out back in the spring of 2009 at the lows. I just remember hearing all over, wherever I went, people said, I'm done with the market, never again. And a lot of those people really haven't gotten back fully. Maybe they got a little bit, but they haven't really got back. I think we still have to have that period, and I think it will come. So I don't want to go into that right now. I just want to mention it because it's really important in terms of the macro thinking. And this is exactly the period you want to be looking at the macro picture as there's this time, this energy lapse, as things start to calm down a little bit in terms of going to new highs, rotations continue. Let's look at the IBB. The IBB, oh, there's a break up there. Oh, still got a segment to go. Good. IBB trading down 5, made a peak B, but it didn't make a new recovery high F/D in the weekly. I'll be back.
I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So here's the down 23, the E-mini at 24.50. Right here is the first opportunity for a bounce. I would say a bounce, and I'm just going to draw in the pattern. That's the potential right here. 24.50, 24.55, 56. That area is where it's critical, if there is a bounce, that it has to be strong enough that it holds for, it's a 10-minute bar. It holds for 3 10-minute bars, preferably going to 24.59. That'll raise the base of support. All I can say is that at 10 minutes to 3, between 10 minutes to 3 and 10 minutes past 3, if the Dow cannot, it's down 236. If the Dow cannot be only down 150 or better, that means 150 or less, but in fact is stuck in the 175 to 210 area, I think this E-mini goes even lower. So this is going to be a critical moment right now to say bounce material, failure material. Okay, just wanted to do that. Next thing I wanted to do was, Bob wanted to know about the IWM. IWM, I forgot to look at. IWM is down, but it's actually up nicely from 132.12 low, hit almost 141 this morning, and now it's down $1.57. The IWM, the Russell 2000, had actually made a very nice rally, technically in every other way. The weekly is still not great. So I'm looking at this and I'm saying it's still, for me, a mixed market in many ways, but absolutely I'm starting to see the patterns that we've been looking at come to fruition, and we'll see if that 21,600 in the Dow is going to be the sacrosanct level I'm looking at for a lot of evidence of further lows or a strong bounce. And I forgot, I wanted to do high-grade copper because it looked like it was topping on Friday. Let's see where it is. I have no idea. Oh, here's a leg. E made a new recovery high, and it's at the low of the day. I'm looking at this because it's going to give us a lot of information about overall overall economic conditions, I believe. So at 3.12, still up 0.005. If copper breaks under 3 in the next week, that's going to be a negative sign. Holding, yeah, so far quite good. So Basil Chapman, Tiger Technicians out. Check my opening call, my daily newsletter out to get a trial subscription. This is a fantastic time to do it. I'll be back tomorrow. Have a great day.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The TAS Profile Scanner Plus, developed by John Lowe.